I'm sure that everyone, one of the situation already happened to him. Entered, price goes with him, reverse on him, entered, price reverse on him, or start ranging on his entry, entered, price reverse on you directly, entered, surprise grab, or make a fake break in the market structure or whatever, then take you out before it go higher and continue pushing higher. And the solution to this problem is your execution is the time. And that's our topic today is the 90-minute cycle. All right, I'm gonna try to explain it as simple as I can and we share everything for free for everyone for the first time. Let's go. What is 90-minute cycle? First of all, every 90 minutes there is a micro order. All right, that's the fucking logic. Every 90 fucking minutes there is a micro order price. We start accounting. First of all, your settings on your trading view. You set this New York time. Sometimes the UTC -5, sometimes it's UTC -40. It depends on the if it's the winter or the summer. So set that first of all. Second things, every 90-minute cycle, you see this. We start accounting from the midnight New York open, okay, and each 90 minutes price sets a micro order. There is a micro order here, micro order here. You see this sell to buy in the lower time frame, micro order here. Same thing for this one. There is a micro order here and price continue put this. That was a continuation, and we will explain the situation too, why price was continuing pushing higher directly. So that means that the best time you can trade 3 a.m. on London, 4:30, London 2. For New York, 7:30, 9 a.m., 10:30. That's the only times, that's only the best times where you can really open a position, but not at 10:30 exactly with the minutes. You should wait the first 15 minutes because the first 15 minutes after 10:30 is a manipulation time, and that's the time where the price gonna move. You're gonna enter, you will see price moving, no accumulation as your entry, not reverse on your entry, no any of this. So let's go to examples to start explaining. So here I have what? I have the previous 90-minute cycle. Okay, highs and lows. What can I see? What can I notice based on this cycle? It's a bullish cycle, right? Or it's a rangy cycle. So price open, go low first, then go higher, okay? Still bullish. Next cycle, price go grab the previous 90-minute cycle high and fail to close above it on the 15-minute time frame. So that starts showing a reversal signature and starts showing that the price or this next 90-minute cycle, the algorithm want to take or push the price lower. That's the logic, okay? It is necessary to see price grip in the previous 90-minute cycle. No, it's not about the previous 90-minute cycle highs and lows. I don't care about those highs and lows. It's about the beginning of this 90-minute cycle, and that was New York sign between 7 and 30, okay? So first you should mark the 90-minute cycle highs and lows. You can mark it to see the previous 90-minute cycle, just what happened, if it's trending bearish, if it's trending bullish, try to understand what's going on in the markets. Find which who is okay, that was we made a mistake here. Who is in control, buyers or sellers? I mean, if the price is bullish or bearish. You can use the volume profile as a confluence like I did here. I have the value area high here, and I guess the value area low was somewhere here. So value area highs and lows is where most of the transfers in the market really happens. I used the value area highs and lows on the previous 90-minute cycle. If the price fell to close above the value area high, start showing that the price, some sellers start entering and the price want to reverse. And wait the 15 minutes. I always combine the 90-minute cycle with the 15-minute time frame. I should see that manipulation at the beginning of the 90-minute, at the beginning of that cycle, and I try to find out there by reading the price action of the 15-minute time frame. But that specific price action, okay, here like example 7:30. So between 7:30, 7:45. I will look at the wait for manipulation, then after that I will try to enter and catch up some entry, of course with the higher time frame alignment. Let's go to the next example. 15-minute time frame, 1-minute time frame, same example. Okay, so that was London actually, not New York. 3 a.m. 4:30. You can see down the lower time frame. Now this is another example on the London. Price grabbed the previous 90-minute cycle high, failed to close above it really, so that as you can see, price go open, go high. It closed above the previous candle, but you can see there is no shadow, there is no low of this candle, so it starts showing a total manipulation. A total manipulation to this high, and it's a rejected candle on the 30-minute time frame because the next candle go close below this low. What happened on the lower time frame? The places of entry. Can you just look at the structure and how price really respecting structure and respecting these highs and never take out these highs? Why that really happened? Because price already create this high, which is the protected place. That is a protected high, and this is the places. All these highs of these candles, as you can see, was protected, protected, protected till the next 90-minute cycle that goes and take it. So that's the time where price start moving. Here it's just gonna go higher or it gonna go lower, and the beginning of the 90 minutes is where the manipulation, where the order sits. So each 90-minute cycle there is a micro order. Go to the next example. The example I already shared that post on the IGLS explained that. So what happened here? Price first of all grab a major type of liquidity. Price open here, that the daily opening price. Price open and go to the high first. So go to the high first, showing me that probably sellers want to take control in the market and they want to push the price lower. Price was bullish on the monthly, on the weekly, on the all the time frames, but that was a reversal trade. Why? Because price just open and go grab a major type of liquidity, and they have here a two-stage SMT. So major liquidity, two-stage SMT. We have some paid speed there. I switch to the 2-hour time frame. I can see this candle failed to close above this candle, so I'm expecting, of course, the next candle to stay below the 50% of this candle and try to trade it. After price creates a protected high, I want to see price currently open and grab inducement. So 2-hour time frame mean what? Mean if you switch, if you mark the open of this candle of the 2-hour time frame, which is actually a C3 candle, expansion candle, and you go to the lower time frame, we're gonna find here, where is this wick? This wick is the place where you, so let's explain like that. So that is the rejected candle, right? You saying this high is protected. The next candle, you want this candle to go like this, to open, go to the high first, then go down, right? So I want this place here on the lower time frame. I want to see price go in and making some fake break in the market structure, inducing some highs. Then I can enter there, okay, to catch this entry. And I catch between this entry and I share it with the story, and I share it with my students on the hoop. So go to the next example. Okay, so weekly cycle, what happened here? Monday just open, fly higher, totally bullish. Tuesday go, start accumulating, never go down, never go up. So Tuesday high is this one, I mark it, and I can see that on Wednesday price just open, go to this high first. You see, grab this Tuesday high. So should expect what? Of course, a short sell opportunity, and that's exactly what happened on the lower time frame, right? It's the same. It's the same stuff. Repeats again and again and again. So price go take out the high. That was the higher time frame to see what's really happening. Okay, just to understand. That was how the daily, how the weekly cycle was looking like. It's the same example, that the 4-hour and that the daily. And as you can see, price just grabbed that stuff. When I grab it and made me this, start thinking about short sell opportunities. So here I use the 90-minute cycle again in my entry. I wait the open of this 2-hour candle on the early time frame. So the open is here. Price open, what the price made goes, never take out this high, but on the gold, which is correlated with the silver, it grabbed the high actually. And I can see this 90-minute cycle between that place to that place. I can use it as a confluence too. I can see the beginning of this cycle open, go to this high, induce, then go lower, so that the real break in the market structure. And the middle of this cycle, which is just a 45-minute cycle, price again made another order. So that is a cycle of inducement. Induce, higher, order, bigger liquidity, much more money, then middle, then start transfer of money. And my entry was here. Okay, I entered here. Okay, and I set my stop loss here because those is protected height for me. Price just go with me. So well, best time to trade is for London. You can trade the 3 a.m. Wait the first 15 minutes after 3 a.m. opening price the London time, the New York time, 3 a.m. So that's the London opening too. So 3 a.m. 4:30 on London, and for the New York time, the best time and my favorite time to trade is the 9 a.m. I always trade 9 a.m. Okay, because I love it. It's easy. It's the easiest time. 10 and 30, not the best all the times. 9 a.m. and 7 and 30. 7 and 30, you should master it. Okay, you should never trade that time if you don't master the directional bias and the higher time frame order flow so well. So if you're a beginner or you don't understand it so well, I suggest to trade the 9 a.m. is much more better. Hope this video is grateful for everyone, and if you want the second part, just comment part 2 and we will do a part 2 about that, backtesting the 9-minute cycle on the live market. See you.